Welcome back to Alpha Recap, the quick, clear wrap on today's market tape. I'm glad you're here. As always, if you have questions, you can reach us at stockalpha.ai. Today we've got litigation headlines, AI-driven winners and losers, and some credit noise to unpack. Kate, thanks for joining.
Thanks for having me. Lots to get through. A busy close with a few names that really moved on headline risk and AI momentum.
Let's start top of tape. Litigation and governance kept popping up. We saw a Pomerantz class action reminder from Microsoft and several notices around Commvault, Peabody-linked claims, and ZoomInfo. Kate, give us the play-by-play and why this matters beyond the headlines.
Sure. So what really stands out here is that these are procedural but meaningful events. A class action reminder for Microsoft signals deadlines and potential participation. It doesn't mean immediate cash losses, but it does increase short-term volatility. Notices looking for lead plaintiffs at Commvault, Peabody, and ZoomInfo mean more event-driven risk across software, coal, and data services.
Right. And a lot of those notices had similar cutoffs, a lot of August 24th, 2026 deadlines, right?
Exactly. Those shared deadlines cluster potential filings into a near-term window. Analysts note litigation tends to amplify idiosyncratic moves, especially when paired with weaker operating prints or disclosure gaps.
Short reaction. Switching gears, semiconductors again led the tape. NVIDIA finished up about 3.5% to roughly $204.12 on heavy volume. That was about 146 million shares changing hands. Walk us through what that tells you.
That kind of volume, plus a sizable price gain, tells you momentum remains concentrated in AI CapEx leaders. When a name like NVIDIA rallies with heavy orders, it signals both institutional and retail appetite. Momentum indicates risk-on flows into AI exposure, and that often pulls related suppliers and ETFs along.
Yeah, that tracks.
And the takeaway is that even as legal headlines increase volatility elsewhere, the AI narrative still reallocated capital towards semiconductors and infrastructure names.
Let's dig into a tech product and discovery story that could be structural. Gravitate cited Ahrefs data, saying the #1 Google result gets about 58% fewer clicks now, driven by AI overviews. That felt like a headline with teeth. What does that actually mean?
This is potentially tectonic. If the top organic result is losing more than half its clicks because Google shows an AI-generated overview or summary, organic traffic-dependent businesses see real revenue pressure. Paid placements become relatively more valuable, and companies that relied on SEO need alternative channels. For publishers and ad-driven businesses, less organic traffic can translate directly into lower ad impressions and revenue.
Not a great day for SEO-reliant models.
Exactly. It pushes firms to diversify distribution. Think paid search, social, direct apps, or platform partnerships. Analysts note this also feeds product decisions. Streaming platforms, for example, may lean into live channels or bundles to keep eyeballs.
And Google itself, obviously platform risk when discovery changes. Any immediate market reaction there?
The data suggests a reevaluation of ad assumptions. Platform owners will try to monetize these AI overviews, but advertisers and publishers will push back or restructure budgets. Momentum in search monetization is shifting from pure clicks to broader engagement metrics.
Quick reaction.
Wow, didn't expect such a big drop.
On enterprise AI and defense, IBM announced workflow-focused updates for IBM Bob, aiming to move customers from pilots into production. And Ruya AI won awardable status on a Department of War procurement marketplace. How do those two threads connect?
They're complementary. IBM's push is about compressing time to value, making AI part of existing enterprise stacks like mainframes and Java apps. That helps monetize AI inside companies. Ruya's awardable status is about opening government procurement channels to smaller AI suppliers. Together, they illustrate two demand fronts for AI: enterprise modernization and defense spending.
So private sector modernization and public sector procurement both lifting AI suppliers. Makes sense.
Right, and that bifurcates winners: those who enable enterprise adoption, those who land government contracts, and platform owners reshaping discovery and monetization.
Time to touch on credit and funding. Oracle was downgraded by S&P to BBB-, and they have about $120 billion of debt on the balance sheet. Meanwhile, Bank of America announced redemptions due July 17th that remove roughly $2.6 billion of bank debt. Kate, walk us through why credit moves like this matter, even if equities barely reacted.
Credit moves change the refinancing landscape. A downgrade to BBB- raises borrowing costs and reduces cushion for large refinancing needs. Even if the stock didn't move much, the cost of capital can creep higher and pressure margins over time. Bank of America's redemptions are a discrete liquidity event. They alter near-term supply and could prompt new issuance. Markets sometimes underprice balance sheet risk when growth narratives dominate.
Short reaction.
Interesting how equities shrug sometimes.
Market movers and flows. American Airlines slid about 4% on very heavy volume, roughly 176 million shares. Leveraged and crypto ETFs like the Inverse Small Cap ETF and the Bitcoin Futures ETF also showed outsized volume. And Saudi Arabia launched a digital package visa tied to bookings, which could help online travel agencies and hotels. What does that cluster tell you?
It suggests episodic rotation. Heavy volume in a single airline tells you either information flow or repositioning. The ETF flows indicate hedging and thematic trading, and the Saudi package visa is a structural story that could nudge bookings for big travel companies over time. But the timing and scale are still unclear. Overall, flows are clustering around themes: semiconductors, travel reopeners, and hedging instruments. And we saw specific names get upgrades or reiterations. JP Morgan upgraded Wolters Kluwer to overweight, and Baird kept Costco at outperform after strong June sales. Small moves can nudge sector flows.
Healthcare and IP had a notable event too. AstraZeneca won an appeal in the Tagrisso patent dispute with Pfizer. That felt decisive. Quickly explain the market mechanics when patent rulings land this way.
Patent wins or losses instantly shift probability-weighted revenue scenarios. For AstraZeneca, the win reduces downside risk to Tagrisso sales. For Pfizer, it increases pricing or share loss risk in some forecasts. Analysts often rerun discounted cash flow scenarios and adjust downside buffers, which can drive sharp reprices in both names.
Short reaction.
That moves models fast.
Before we wrap, a quick checklist of what to watch tomorrow. Litigation filings and company responses tied to Microsoft, Commvault, Peabody, ZoomInfo, and Roundhill's fund restatement. Product announcements or customer updates from Netflix on live channels and from IBM on Bob adoption. Credit commentary around Oracle or S&P, and any refinancing signals ahead of mid-July redemptions. And finally, volumes in semiconductors and ETFs, plus early travel booking data tied to the Saudi package visa.
That's a solid list. Also watch for late filings and any guidance adjustments tied to those legal notices. Deadlines often create priceable events.
Okay, quick hits. 2 or 3 takeaways for listeners who want this boiled down.
1. Litigation and governance headlines are piling up, and that tends to increase idiosyncratic volatility in affected names. 2. AI narratives remain dominant, but they're bifurcating. Enterprise adopters, defense suppliers, and platform owners face different risk and monetization paths. 3. Credit actions, like downgrades and scheduled redemptions, matter, even when equity moves are muted. They change refinancing risk and funding costs.
Simple and useful. Remember, analysts note these are catalysts and data points you might use to rerun valuation or risk scenarios. This is informational only, not personalized investment advice.
Right. We aren't recommending any buys, sells, or holds. The aim is to highlight what moved markets and why it might matter for models and positioning.
Final quick reactions. 2 short lines.
Markets closed with clear themes.
Big move in semis, lots of legal noise.
Yep, keeps traders and analysts busy.
All right, that's a wrap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. Catch you next time on Alpha Recap.